In this presentation, we will enter both business and personal cash outflows from our bank statement into the QuickBooks file, outflows that are related to mortgage and the medical expenses and IRA expenses, individual retirement accounts, among others, within QuickBooks for the month of January. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the home page. We currently have the open windows open. We can open the open windows by going to the view dropdown and selecting the open windows list. We're now going to go to our check register by selecting the banking dropdown and selecting use register. We're going to be using the checking account and say OK for that. We've been entering data, going to our bank statement here, bank statement, from the bank statement. We've been entering the deposits, which we've got down, and then we entered all these checks and whatnot, which include business and personal stuff we might want to track for taxes that might not be business and whatnot. And we're all the way down here. We're going to finish off, hopefully, this time, starting with this Office Depot. We're going to go back into QuickBooks, and Office Depot is on the 25th. So we're going to say that's E, Office Depot, new vendor, typing that in, saying tab. We're going to quickly add that, and it will be a vendor, and the amount will be for $370. And we're going to put this to a business expense. We're saying that this is going to be office supplies that we have purchased, and see if we have an account then for us provided by QuickBooks. So we're looking for something like supplies or office supplies. See if QuickBooks gave us an account such as that. Here's office supplies. That looks good. We don't need a class because it's business, and that's the default, which will be unclassified. Going back to our file, we're going to cross that off or highlight it, saying that it is done. Then we have the mortgage payment. So this is going to be personal. This is going to be what we're saying. We have a loan on the house, the mortgage on the house, and we're paying it, which is nice, which we're thankful for that we can do that. So we got the bank, and this is going to be mortgage. So when we pay the mortgage payment, it's typically going to be paid to some bank, and then we'll put that. This is a generic name, of course. Quickly adding that, it's going to be a vendor. We're going to say that it's for 2300, and then we need the account. Note that when we pay off the mortgage, it's really we're paying off a loan, so we should be going to, paying off partially a loan and some of the interest expense. But from a budgeting standpoint, which is what often people use the profit and loss for from a personal side, we might just want it as a business, as an expense, all of the lump sum, so we can see what we're paying each month. So I'm going to do that, and notice this is deviating from proper accrual accounting, but is probably what the most useful thing is for how most individuals use the profit and loss, which is for budgeting type of activities. So for that reason, I'm going to put it in here to just mortgage expense, both interest and principal, and we'll talk about the balance sheet side of things a bit later. So we're going to go to Setup. It's going to be an expense. We'll keep it at that and save and close and enter. Next item. Crossing that out or highlighting it, say that we have completed that one. We now have the Blue Cross. So Blue Cross, we're going to say that that is our individual medical expense. This is going to be our insurance. So we're going to say that this is not part of the business, but something that we want to track possibly as something that could be deductible for non-business purposes as tax deductions. So we want to organize it in such a way that we can at least present it to our tax preparer to see if it's something we can use for tax preparation. So 26, we're going to say it's E, electronic transfer, and we're going to call this Blue Cross. That's going to be our vendor. That's who we paid for our health insurance. It's going to be for $500. And then we need an account. Now, I don't want to just pick the insurance account because that was our business insurance. I want to make one that's going to be separate, something different for personal. And obviously, the other insurance account was probably something like liability insurance as opposed to medical. So we might want to go into that insurance account and address it and adjust it to call it, business liability insurance rather than insurance medical. I'm going to group it as insurance first and then medical rather than medical insurance, emphasizing the insurance component. We could do it the other way around, however. So I'm also going to separate this account, which could be deductible from other medical costs, such as doctor visits or prescription drugs. And that is a matter of preference. might be useful, however we want to group it for our personal needs and for the needs of tax preparation. So we'll set this up. It's going to be an expense type account. We're going to say save it. And there it is. Next item. So I'm going to go ahead and highlight this one. This one has been done. The next one's Dr. E. That's going to be our doctor. So we're going to say Dr. E is going to be our doctor. And we're going to say that that happened on the 29th. So we'll say the 29th. E. Dr. E. That's just going to be the name of the doctor, apparently. And so it's going to be for $195. And then we could put this into the same kind of group of medical, but I'd like to break it out and just have rather than having, we could be very specific and say this is Dr. E's expense account, or less specific and call it medical in general and possibly put our prescriptions into it as well, prescription drugs. So that's what I'm going to do here, just calling it medical costs. And then tab, we're going to set that up. We're going to set it up as expense, okay, and it should be personal. And note, I may have missed on the last one to pick it up as personal, and we'll find that as we look at the statements, and we'll readjust them when we look at the financial statement. So bear with us. We'll go through that, and we'll take a look at it and be able to adjust it if I missed it. So we'll split this one. Classes, we're going to make this personal, and enter, and enter. Next item, if we go back over here, we're going to say we found Dr. E. Next item is Rite Aid Drugstore. So we're going to say that those are prescription drugs that we're buying at Rite Aid. So we'll go back over to QuickBooks and say that that's going to be a personal for prescription drugs. And this should actually be on the 26th. And notice this one I put on the 29th, and I think it should have been on the 26th. So I can go and change that. I can go here and just make it go to the 26th. So QuickBooks is fairly adjustable in that format. So we'll save that. And there we have it. So this one's on the 26th. It's going to be E electronic transfer. And we're going to say that this one was for the Rite Aid Drug Store. Tab, quick add, vendor. It's going to be for $37. And I'm going to put this to the same medical expenses, medical costs, and split classes, personal, and then enter. Next item, if we go back over here, we're going to say is Edison, and this is going to be the personal Edison. So we're going to say highlight this one, and I'm going to go back over and say this happened on the 28th, and this is E, this is Edison. Notice we already have Edison, and that's because we paid him for the business as well. So this one has the same vendor for personal and business, and it's already going to utilities. So I may want to break that out. I may want to say, you know, I'd like to have a different utilities account. Maybe I'm going to call it just personal utilities in order to break it out from the business. I could just break it out by class, and that would be fine. But if I do it by both, it'll be easier for me to see if I've misclassified something. So I'm going to tab that, break it out, and say, okay. And I also might want to try to break it out as I see it on the bank statement. So I might even need a different vendor called Edison Electric Personal, because when I do that, it'll memorize the proper account. So next month, I won't have to keep on switching back and forth between personal utilities and just utilities or business utilities, because it'll memorize it by vendor. As long as I remember to put the correct vendor in, then it'll pick up the correct account, which is probably a little easier. So I'm going to quick add another vendor. So now I have two Edisons, but one is our payments related to my personal, one related to business. I'm going to say okay. And next item is going to be the auto insurance. Auto insurance. So we're going to go back over for auto. That's going to be on the 28th. We're going to say E and auto insurance. This is a generic name, of course. Tab, quick add, and that's going to be for 1200. And we're going to just call this, now we could emphasize either auto or insurance. We here are going to emphasize insurance. So we're going to say insurance-auto. we're going to make it as a personal account here. Another area where we might use the auto for business and personal, and we'll have to figure out how are we going to deal with that when we do like taxes or something. How can we break out the fact that we use the same car maybe for business and personal? We're going to put it on the personal side here. We're going to track our information, and then during tax time or whenever we need to, we'll figure out some method to allocate over the business proportion. Maybe by going through it and picking up specific amounts and allocating by class, maybe by using the tax mileage method or some type of percentage of the usage. So we're going to say save that, going to split, we're going to go to personal and record, yes, next item. So we've got both of these. The next one's going to be the gas company. So the gas company, back over, we're going to put this in as of the 29th. So I'm going to say +1, 29th E. This is going to be the gas company, tab, quick add, vendor. It's going to be for $26. And then this one's probably utilities, but I'm going to put in the personal utilities. And there we have that, split. And we'll make this personal in terms of the class. And record. Next item we're going to say is E-Trade. We put money into an IRA account, so an individual retirement account. So we're going to go back over here and say, all right, that happened on the 29th. E. We put E-Trade is a type of online investment where we can buy stocks and bonds, and we put this under the umbrella of an IRA, individual retirement account, to hopefully get tax benefits for it. This one's one that's a bit tricky because really we're putting money into an investment, stocks and bonds. So it doesn't really make sense for us to just record an expense here, kind of like we did with the mortgage. I mean, we should probably record this as an assets type of account. So this is one area where we kind of have to deviate and say, okay, I should probably put this on the books as an asset. If we did put it on the books as an expense, it wouldn't be a killer. I wouldn't totally destroy our books or anything. It would just mean that we wouldn't be able to track the assets as well. So we'll talk a little bit more about the balance sheet stuff later. But we're going to call it just E-Trade and an IRA. And we're going to enter that account, and we'll set it up for now as an asset type account. So I'm going to select not an expense, but we're going to put it into other assets. And we're not going to put it in the current, but long-term or other assets. Why? Because we're supposed to not take it out until we retire, which is more than a year, most likely, which means it's long-term. So we'll save and close and record that. Next item. We've got state taxes. So this is going to be property taxes. So we'll enter that information back to QuickBooks. We'll say that's E for electronic transfer. We'll give it an E. And this is going to be state tax, and it's the property tax. So state tax, property tax. And we'll quick add that. And of course the state, it depends on what it would be called, be like the county, whatever the county name is, or whoever's charging the property tax. So we're say 346 is going to be the property tax. The reason we had it red is because this might be something that's deductible for the federal side. State taxes might be deductible for federal tax preparation. We're just going to call this property tax and tab. We're going to set that up. It's going to be an expense. That looks good. Saving that and split classes. We'll make it personal and record. What else we got here? We've got the other two. These are going to be our payroll. We're going to assume these are payroll. Now, we're not going to get into payroll here. We're going to assume basically our payroll is being done by like an ADP or a Paychex outside payroll. And now we see it on the bank statement, and we're going to record the net check only here. We're not going to get into different ways to record payroll, but we want to just note this is going to be a business expense that we're going to want to put on the books on the business side, not the personal side. So we'll go back into our QuickBooks, and we're going to enter this as of the end of the 31st. It's going to be E. Adam is our first employee. Hamilton. Tab. Now we could set this up as a vendor or an employee. I'll put him in as an employee and OK. And we'll set up, because we're not using payroll either way, so the payroll function, whether they're a vendor or an employee, isn't going to be a whole lot different. We would like to be able to track them by who we paid, in essence, the way we have it on a cash basis here. And then we have to set this up to payroll expense, which is probably given to us by QuickBooks because it's a business account and they want us to buy payroll. So there's payroll. And then we're going to have that, no class needed. And the last one was Erica. So Erica, same thing. We'll enter the other types of deductions in the next presentation or as we reconcile. This is going to be Erica. Robert. I don't think that's spelled right, but that's how they say it there. That's how she spells it. So we're going to say there's that. Going to be an employee. Okay. 630 payroll expense and enter. So that's what we have so far. If we missed anything, if we missed any classes, we'll take a look at that and we'll pick those up. If we miskeyed anything or have a wrong class, as we look through the classes and as we do the bank reconciliations, we'll be able to make those adjustments as we'll see going forward. We'll go to the company file. We're going to go to the profit and loss by class. Just take a look at it, what we have so far. 010120 being the date, 010120 to 12/31/20. That's January through December 2020. We see that we have the business over here and then the personal broken out. Like I can see right near here that charity is in the wrong area. I know that charitable costs has to be personal. All the rest of it's personal. It must be that I just miskeyed something. I didn't put the class. No problem. QuickBooks allows us to auto zoom in here, and then just change the class retroactively, which isn't the best for an audit trail, but it's useful for our purposes here. So we close that back out and done. So I did that kind of quickly. We'll do this in a few more examples of that, but just note, we could find any transaction by just zooming into it, finding the transaction and adjusting it as needed. So on our business side, that looks business related. This is medical insurance. So again, that's not business related. This should move over as well. So I'm going to do that by just double clicking on it. And of course, when I input this as we went, totally did this on purpose. So just to demonstrate this particular point. And then we're going to say personal and save and close. Yes. And so that's going to be very common for most people, for me at least, to go in here and have to pick some of these up. That's okay. And office supplies, payroll, that looks business, utilities, personal. So again, it says personal. That's the point of us putting that there. So we know that the difference between utilities and utilities, business is personal. That makes it a lot easier for me to say, oh, if it was all grouped in one utilities account, it'd be a lot more difficult for me to go in there and say which is business and which is personal. But if we break out the utilities and then I have something specifically in the personal utilities but the wrong class, then that's easy for us to spot. Say, all right, set that up and personal. So note, my personal goal is not to not make any mistakes, but be able to pick up the mistakes, have a system so we can pick them up, because there's no way I'm not going to make mistakes. But there is a way I could set a system up so I could find the mistakes that I make relatively easily and fix them fast. So then we have the postage, we got the property taxes, rent, and then again, restaurants, sit down. This 98 doesn't look proper. Looks like it's in the wrong place. I'm going to double click on it, go into that 98, change the class to personal, save and close that up, and there we have that. So telephone, utilities, that looks pretty good so far as the breakout goes. For more accounting information and accounting courses, visit our website at accountinginstruction.info.